With the financial markets in turmoil, many people are wondering if it's a good time to invest right now. So let's do a thought experiment. Groceries are something that we buy on a regular basis. For the most part, we don't try and time when we buy groceries. We just buy them when we need them. But sometimes we come across sales. And how do we react to sales in the grocery store? Alright, so before we talk about investing, I actually want to show you a really cool toilet paper trick that you might find useful right now. So yeah, it's been really nice. This is all I've been doing to get my toilet paper. And then there you go. You got a nice full roll. One of the biggest questions on people's minds right now is whether it's a good time to invest. So let's talk about that. Let's talk about whether you should invest right now in the stock market. And later in this video, I'll be happy to show you exactly what I do in times like this. So first of all, there's kind of like this phrase that gets tossed around when people are thinking about trying to invest into a down market. And it's called trying to catch a falling knife. Please do not try that at home. The idea behind the phrase is trying to time the market perfectly so that you invest at the very bottom of a market that's declining is very difficult to do accurately. But that's actually okay. For a long-term investor, there's no such thing as a wrong time to invest. Any time's the right time. So not only is this moment in time an okay time to invest your money, it also kind of has a dash of good luck thrown in there for good measure. And allow me to explain that a little bit further. Let's talk about investor psychology. I like to use the grocery store as a model to think about investor psychology. We all buy groceries on a regular basis, but we never really sell groceries. So that means that we're a net buyer of groceries. And being a net buyer of something means that we want to purchase it at the lowest price possible. So when we're shopping at the grocery store and we see an item on sale, that makes us excited and it makes us more likely to buy more of that item. So let's think about that in terms of the stock market. Most of you watching this video are probably in the accumulation phase of your investments, or you're just about to get started investing. This means that you already are, or you're going to start saving for long-term goals like retirement. This means that you're going to be a net buyer of investments right now. You may sell the odd share from time to time or rebalance your portfolio, but for the most part, you're not going to be selling your investments. And because you're a net buyer, that means low prices benefit you. And yet, most people behave about the grocery store and the stock market in completely opposite ways. Most people get scared about prices dropping in the stock market. But is this all that different from the price of bread dropping at the grocery store? Or how about when investors get really excited because the price of a stock has gone way up? Well, think about it this way. Let's say the price of bread at your grocery store is normally $3, but today, things have changed.
Bonjour, je suis la boulanger. Aujourd'hui, j'ai une baguette pour $10. I turned my nose up at you.
Hey there, what can I get for you today? We've got some baguettes here for $1. Great, here you go. We obviously like when grocery items we want go on sale. You wouldn't go to the grocery store and see that the price of bread has gone from $3 to $10 and think to yourself, wow, bread is doing so well. It's doing great right now. I should buy more of it. No, you would be like, I'm gonna wait until that's more reasonably priced. So why do we behave so differently in the stock market? Well, the obvious difference is that bread is a consumable and a stock is an asset. But the main principle that I'm trying to drive home here is that you are a net buyer of investments just like you are of groceries. Since I am a net buyer of investments, I don't get concerned about investment prices dropping. Actually, in fact, I get a little bit excited because that means cheaper prices for me, just like I was shopping at the grocery store and I see that everything's on sale. It means that I can get more shares for the same amount of money that I would contribute to my investments on any other day. And since I don't intend to sell anything I own until many years into the future, and I have various safety nets in place right now, things like an emergency fund, I'm not worried about my investments dropping in value because I'm not relying on them for my wealth right now. So what does that mean for you? Well, I definitely don't advocate for trying to time the market because the data is clear that time in the market beats timing the market. But with all that being said, I think that right now presents a unique opportunity where if you are about to begin investing anyway, regardless of market conditions, then you've kind of benefited from the luck of the draw here because you're getting to enter at a time when asset prices are a little bit cheaper than they were a few months ago. And because of that, future expected asset returns should be higher relative to what they were before the market crashed. However, with that being said, does this mean that you should alter your investment strategy because of market fluctuations? To answer that question, let me show you what I do when the market fluctuates a lot. All right, so when it looks like the market might be heading downwards, here's exactly what I do. And now let's say that the market has actually crashed and we're down like 50% now. And finally, here's what I do when the market has recovered and gone on to reach new highs. That was crazy. Yeah, that's right. I essentially do nothing except let out one single bead of sweat. Hey, I'm human. I still feel the impacts of a down market like everybody else does. It's pretty scary for most people. But I absolutely do not change my investment strategy whatsoever. When I first started investing when I was 18, I put my first amount of money into the market right before it proceeded to drop by 10%. And even off a drop of just that size, there was a lot of talk of people saying that the market was gonna go to zero. I had never been exposed to this type of thing before, so I was pretty worried about it. Luckily, I was able to calm myself down and realize that I probably needed some type of plan and to just stop reading things on the internet. Because to be honest, like most 18-year-olds, I wasn't exactly thinking about long-term future things. Fortunately, my ignorance at that stage of my life kicked off a journey where I was able to learn the things that I needed to get me to the place where I am today. And it was at that time that I began to establish the exact same strategy that I use until this day. If you're thinking about starting to invest right now, then that is fine. You'll benefit from the lower asset prices like I've said. But you need to make sure that you're entering into this with a clear plan that you're going to stick to throughout the entire timeline that you'll be invested for. This means that you should not adjust your portfolio or your strategy based on market fluctuations. If you're constantly messing with your portfolio, you're likely to do more harm than good. Now, with that being said, a little caveat would be that if you realize that your risk tolerance is too high or too low, there's nothing wrong with adjusting your portfolio because of that, but you also need to make sure that it's in line with your long-term plan. The best way to proceed here is just enter into the market as if things were completely normal right now, and just take it that the way that markets are down right now is just a cherry on top for you. So this leads me to something I want to be super clear about. The market going down is not a reason to invest. If you weren't thinking about making investments before the market crashed, then you shouldn't be thinking about doing it now. The reasons that were holding you back before are still there, and you could very well do more harm than good. The stock market is down right now because the economic outlook for at least the short term is not very good. Is your income safe? Is your job safe right now? Do you have an emergency fund in place? there's various things that need to be taken care of before you go and run into the markets. And if you just jump into this with the intention of just trying to take advantage of these cheap prices before dealing with your previous priorities, you risk making a huge financial mistake. And I really want to save you from doing that. However, if you seriously were considering on starting your investments before this happened, then you can by all means still proceed now. You benefit from the luck of the draw, like I said. Just make sure you have a plan in place. And if you don't, one of the simplest and most effective plans is to just simply take an amount of money and periodically invest it into the markets over a period of time. Maybe that means to take a portion of every paycheck and invest it every 2 weeks. Having a system like this in place allows you to remove human emotion and bias from the equation, which is probably the #1 hindrance to investment returns. If you use a simple dollar cost averaging strategy to go into the market, then you'll be assured that you're using an intelligent investment strategy in market upturns and market downturns. It'll work throughout any market situation. It works now and it'll work forever. And you can just set it and forget it. And so if you are a beginner, then you might also be wondering, what the heck should you actually buy then to invest in? Perhaps you're looking at the share price of a few companies that you know and you're getting all giddy looking at the sale going on. Well, for those of you who have been following the channel so far, then you know that I advocate for the use of index funds because they are factually the best way to invest your money. If you're not familiar with them, I'd recommend checking out the little intro video I did about them to learn more. But I'll be covering them tons on this channel also. You're actually quite lucky if you found my channel and you're a beginner, because not only am I going to be able to help educate you about index funds, but I've also done a few videos that will help you make an investment plan, figure out all your priorities before investing, and then invest your money and be able to manage those investments confidently. So here's what I'm going to do for you. I've already made videos covering some relevant topics, so I'm going to put them in a little list for you right now that you can check out and watch in order as kind of like a mini beginner's guide. So the first video to check out is the Stairway to Financial Freedom, which breaks down the financial priorities you should cover. The next video you should check out is the Intro to Index Funds, which will give you a general overview of those and how they work and why they're a great investment. The third one you should check out is the Tale of Three Traders, because this breaks down how different investment strategies performed through different market situations, like the one that we're in right now. And finally, check out the video on risk assessment so that you can do your own risk assessment and know what might be appropriate for you to use as a portfolio in the stock market. I'll also be releasing a video on something called asset allocation, which goes more into depth of how stocks and bonds work in your portfolio to give you an expected level of risk and return. And that'll give you an idea of how different portfolios, different mixes of stocks and bonds have performed in the past, so that you can get an idea of how those can maybe perform in the future. And then finally, I'll also be releasing the much anticipated index fund tutorial, where I'm going to walk you through how to actually buy index funds on your own and build your own portfolio with them. But before you do that, it's important to make sure that you understand everything we've talked about today and everything in that list of videos that I've just shown you. And then future you will look back on this moment of time right before the spring of 2020 and remember it as a very interesting time. You'll remember you're locked in your home and you're studying at the best financial institution in the world, Cash College. And then you'll look over to your investment account and smile. So with all that being said, I'd like to hear from you if you're somebody who's thinking about getting started investing right now in this market. I'd like to know if this video is helpful for you or if there's anything that you'd like to know more about. And keep an eye out for that asset allocation video coming out soon. That one will be super important. Thank you all for watching and learning with me today. I'm Steve Antonioni, and this has been Cash College on Is It a Good Time to Invest? I'll see you all again soon.
Thank you.